Retiring to the great state of South Carolina. Well, join the crowd because South Carolina is becoming the Florida North for Northeastern retirees. It's probably a good idea to know how South Carolina taxes retirees before you make that trek, or if you're already in South Carolina, before you hit the retirement and you say, I'm staying here put for the rest of my life. Let's take a look and dive right into how the great state of South Carolina taxes retirees right here at the Heritage Wealth Planning YouTube channel. If you like what you see here, don't forget to subscribe right there, my friends. Hit the notification bell to be notified of future content for sure. So subscribe and hit the notification bell. I do about 5 videos a week, and you want to keep apprised because there's lots going on in the world of financial planning. In fact, I just read that the Supreme Court ruled that the SEC, Securities Exchanges Commission, they cannot appoint administrative judges. Those judges have to be appointed by president. So very interesting stuff. Don't know how it's going to affect the investment world. Probably not much, but I don't know. But that's the kind of stuff you need to be kept in the loop on. And you will here at the Heritage Wealth Planning YouTube channel. All right. So let's dive right into South Carolina and see how they tax retirees, because it's interesting for sure. South Carolina is actually quite favorable, generally speaking. At least I live in Georgia, and every time I'm driving through South Carolina or to South Carolina, I certainly want to get my gas in Georgia, in South Carolina, not Georgia, because I know for a fact the gas taxes is lower. But here's Kiplinger's with a light green for South Carolina, even though my state here in Georgia is a dark green. Interesting. So let's see why Kiplinger's is not giving South Carolina the dark green for retirees. So let's see what we got here. You're going to click on there, my friends. There we go. And let's see what we got. All right, so the Palmetto State extends its southern hospitality to retirees. The state does not tax Social Security benefits and provides a generous retirement income deduction when calculating state income tax as well. It is also phasing in a new deduction for military retirement income over the next few years as well. That's fantastic. State income tax rates are reasonable and property taxes are very low. Senior homeowners will qualify for homestead exemption. So far, so good. I like the idea of a low property tax, lots of deductions and exemptions for income tax. Let's see about the sales tax. Not so bad at 7.22, 6% state levy and 2.5% for localities. So which is the average of 7.22%. So that's not horrific by any stretch of the imagination. Once your taxable income is over $14,600, you're going to pay 7% income tax, which state income tax rates are reasonable? That's not reasonable. $14,600, and we add that to our married couple filing jointly with a standard deduction of $26,600. That's $41,000 of gross income before you're in a 7% bracket. That doesn't seem reasonable to me, Kiplinger. So let's keep going down here. Benefits are not taxed for Social Security. That's a benefit. Other retirement income is taxed with limits. If you're younger than 65, up to $3,000 retirement income is exempt. That's good. Older seniors are eligible for 2 deductions. If you're over 65, you may deduct up to $10,000 of qualifying retirement income. And again, I'm going to presume that's $10,000 per head, not per tax return, but actually per person. Qualified income includes KEO plans, IRAs, public employee retirement plans, and military retirement benefits. Okay, all right. So it includes IRAs, military retirement benefits, KEO plans, public employee retirement benefits. Does that mean 401ks? Or 403Bs, don't know. In addition, if you're 65 and older, you can take a senior deduction for $30,000 for married couples filing jointly, but the $15,000 in deduction must be offset by the amount taken with the retirement income deduction. So if a taxpayer takes a $10,000 retirement income, he can only take a senior deduction of $5,000 for a total deduction of $15,000. So it sounds like you can take $15,000 per person. So that'd be $30,000 total. A surviving spouse may continue to take a retirement deduction on behalf of the deceased spouse. So that's fantastic. Some taxpayers 65 and older may not have to file a tax return if they meet certain conditions. Retired military are eligible for deduction on their military retirement benefit, and that deduction will be rising in the next few years. For the 2016 tax year, taxpayers under the age of 65, the deduction is $5,900. but increases by $2,900 each year until it's fully phased in at $17,500 in 2020. For taxpayers 65 and older, the deduction is $18,000 until it's 30,000 was fully phased in 2020 for military pensions. Okay, well, they say right here, 401k and other defined contribution plans do qualify for the retirement income exemptions. Well, that's good. So again, we got 10,000. If you're 65 or older, you may deduct up to 10,000 from retirement income. And again, Social Security is not taxed. In addition, if you are 65 and older, you can take a 30,000 deduction for married couples filing jointly, but the 15,000 per person must be offset by the amount taken with retirement income deduction. So, okay, so basically you can't take both. You take the greater of one or the other, it seems like to me. So married filing jointly, you don't pay any tax on the first $30,000 of IRA, 401k, 403b, military pensions, income, and you don't pay any Social Security taxes either. So that's good. And then your taxable income, though, your bracket is still pretty high once you hit a certain taxable income threshold, which is actually pretty low. Whoa, look at that property tax in South Carolina. The median home value is only $139,000, and the median property tax is $788. That's like 0.5%. That's stellar right there. Seniors 65 and older, there's a homestead exemption. The first $50,000 of the property's fair market value is exempt from local property taxes. To qualify, you must have been at least 65 years and a legal resident of South Carolina for at least 1 year. So basically property taxes in South Carolina are almost nothing. Sales taxes due on purchases for vehicles. They do levy an annual tax on a vehicle's value, and which counties set the rate. If you own a $10,000 car, your personal property tax would be $173 based on the average statewide. So basically you're paying, 1.75% roughly each and every year on the value of your vehicle. And that kind of stinks. And you got to pay sales tax as well when you make the purchase. So that's not cheap. I mean, that's still, that's more than we do in Georgia. That's for sure. All right. And no inheritance or estate tax. So by and large, pretty good stuff here. I mean, a lot of exemptions for income. Social Security is not taxed. Property tax is way low. And sales tax doesn't look to be that high. So far, so good. Let's see what the nation says. Yeah, so state and local tax burden, they rank number 42. That's good. We want to be ranked low in that regard. And the tax freedom day is 8, and we want to be ranked high. So that's fantastic. Sales tax, they rank 7.37 total. That puts them number 18 in the union, which is pretty, it's still in the top 20. We don't want to be in the top 20, but that's not that's not extraordinarily high, frankly, even though it's ranked number 18. This is what I was talking about. Gas tax is only 42. That's good. We want to be low there. And the smoke tax, cigarette tax is 57 cents a pack. So sales tax is middling, that's for sure. Not horrific by any stretch, but on the lower end of the top 20, which is reasonable. Property tax is among the lowest in the union at 0.56. And then when you factor in the average money that the state collects in property taxes, is pretty high, relative to where the rate is. But generally speaking, I mean, you got a pretty significant exemption on your homestead, plus at a low rate as well. So you just can't, hard to go wrong there with the South Carolina property taxes. Sales tax on the higher end, but again, not oppressive. Income tax with a total tax burden, certainly on the lower end. That's good. So let's go to smartasset.com and see how they tax the income in South Carolina. It will be interesting to see this. And what we're going to do, as we typically do, is we go married filing jointly, born in 1952. I just want to do 1952 to make sure that we're getting the 65 and above, where you get some deductions there. We're going to do 50,000 in Social Security and 50,000 in IRA income. And this is just any kind of retirement accounts. Could be pension, doesn't matter. And you pay nothing. Why do you pay nothing? You get $30,000 exemption. That doesn't seem right to me. So let's keep looking down here. South Carolina does not tax Social Security benefits and has a $15,000 deduction for seniors receiving any type of income. State has some of those property, but that's more than. Let's take a look. Retirement taxes. If warm weather, sandy beaches, low tax are among your priorities, South Carolina may be a good choice. Again, a lot of people, my friends, are retiring to South Carolina as opposed to Florida. What makes South Carolina a good choice for budget-conscious seniors? The cost of living is 4% lower than the national average. On top of that, it provides full income tax exemption for all Social Security and a $15,000 deduction for seniors receiving any other type of income. South Carolina does not tax Social Security whatsoever. It provides substantial deduction on all other types of retirement income. All right. Let's see. The 15th. Okay. The deduction for taxpayers. Okay. The taxpayers 65 and older. Deduction is $15,000. That can be it'll apply across all types of income. Well, I don't get how I don't get that, because they're saying at the end of the day, if your taxable income is, you're still paying. I don't get how they're getting zero taxes there. So I don't know. I mean, either way, that doesn't make sense. But that should be $20,000. It should be taxable. So $20,000 of taxable income. Well, let's see. You got $50,000. Your standard $100,000. Your standard deduction is $26,600. Maybe they're saying that there is no taxable income because you don't tax Social Security. You get the first. I guess that's it. I guess they're saying at the end of the day, the Social Security is completely exempt from any taxes. $30,000 of retirement income is exempt because you're married, filing jointly. Standard deduction is $26,600, so there's no taxable income. Huh? I get it. So that's fantastic. So South Carolina is definitely favorable. Low property taxes, moderately low sales tax, and essentially no income tax. Could be hard to beat that, my friend. So if you like what you hear here, don't forget to subscribe. Click on the notification bell below. Thumbs up are always helpful, my friends. And of course, comments are always welcome. Lastly, visit the blog at heritagewealthplanning.com. We'll see you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.